to Friday's stock investment and business report, and got a lot of things to talk about for end of closing bell today on all the broad market indexes, the Dow Jones, the Nasdaq, and the S&P 500. That's Standard & Poor's for all those people, good folks out there who don't know what that is. So this is Friday's closing bell market report for uh, for September, almost the end of September, actually. Anyway, I want to get right into it. We're going to look at what's happened over the week, and then we're going to look at what happened today. And I'm going to wrap this thing up with the end of 4 p.m. closing bell on the Dow on Wall Street, and see where we're going to head from here. So let me start off with some hardcore numbers. The S&P 500. I mean, not S&P, but the Dow went down 265 points on today's heavy trading. A lot of it still due to market jitters about the lasting effects of the Fed rate hike and other numbers that have come out, particularly in the Department of Gold, and also the increase in gold price, on average about $54 an ounce for this week. Usually when gold prices go up, the market tends to have a contraction, and that's what we're seeing this week, actually, which is higher gold prices and people just saying, well, you know what, if this is going to happen, we're just going to hit the sell button. But there's many other reasons for hitting the sell button this week. You see the Fed discount rate, and they're talking a substantial rate hike. That always makes people, in investments portfolios very nervous, and so we're looking at that as part of it. And also some economic news that's relative to everything too, folks. You got to take that into consideration with the jobs situation and economic moat in America. Isn't doing as well as what this quarter as what everyone has been hoping it for it to be. Now, I've been harping on that for a while now, but that's very relevant to why the market contraction is going on. Now, I've hit it right on the money all the time. Pretty much, I'm almost hitting out of the ballpark on a regular basis here on my reports. You see, there's more things going on, and you good folks out there who are smart investors are watching what's going on with the underpinnings. We've had some flat trajectory, which has been causing some real trouble. But now, over the last, if you chart it over a longer period of time, now we have some market volatility, and that market volatility is projected to keep going well into the end of the year. Now that's going to cause a few people to have some problems with their long-term investments, because now they're questioning exactly which way the market's going to go. Are we going to go for a nosedive crash, or are we going to ride it out and try to go above the neckline and stay afloat? Obviously, the answer is most people are just going to try to do the buy and hold and wait and see what happens. You're going to get killed if you do that. Seriously, folks. With that market volatility up and down like a pogo stick, you're not going to make it. I've been telling everyone for a while, this isn't going to go away anytime soon. It's because we're going through a contraction phase where it's also affecting it globally. You see that overseas with the European exchange, several European exchanges, and you look at that today, before closing bell today, where all the broad markets in Europe or in the EU are all down on an average of about 100 points. That's a sizability of pretty heavy duty, ticking towards a more serious downhill slide. Now, if you look at Canada's markets, they're the same way. Canada's reporting about a 60-point drop on average on all the broad markets in Canada. You go to Asia, it's a mixed 365 points on the major market in Asia, and the rest of the markets are mixed signal, which is up. And that spells, if you look at all that on chart data, ladies and gentlemen, you can see how it all funnels right back to Wall Street. It all funnels back to what the Fed is doing and the Treasury in America is doing. You see that when market people, especially institutional investors, are seeing this happening, they're all keenly aware of how it affects their wallet and their Gulfstream jets. You see that runs through their mind on a regular basis. So when they see the possibility of losing their Gulfstream jets and their fancy retirement plan, that's when they hit the sell button and bail out. But you and I know, as smart investors, on this weekly investment report, that what you got to do is buy on the bottom, and that's the best thing to do. Scoop up all the good investments, and then make money off them. Make money off of everybody else's pain while everybody follows the herd and gets crushed, going out the exit door. You know that, and I know that too. So anyway, if we're looking at how the broad indexes are in America, getting towards from Monday to Friday of this week, what it is that we've seen a volatility of going up about approximately 140 to 180 points on Monday, only to torpedo the same, send a torpedo right in the side of the ship and go straight down to the bottom, where we went by Friday. Now we're down to 265 minus. So you see the mindset of the herd and the way they're thinking, which is they're thinking Monday we're gonna make a whole lot of money, and then Friday we're all getting slaughtered, and we're gonna hit the sell button and exit and get out of here. Well, like I said, you and I know as good good, smart, common sense investors, what you got to do is buy on the bottom and buy in real heavy, and then wait till you get the as a good contrarian, wait till you get the signals that the chart data will show you, and then you can start doing your own selling when the market's all the way to the other side, going all the way through the roof. You see, that's how you make a killing doing this job. And it is a job. It's a really great job, actually, to be totally truthful. But it's a way of making money and making yourself, increasing your wealth, and you're not working too hard to do it. It's just smart investment. That's what I call it. So anyway, now where are we going from here? Well, I'm going to stare into my futuristic prediction charts here and tell you where I think we're going. You see, I think we've got some economic data that we're going to see more affecting us, which is the new home starts and housing and real estate is going to chime in next. I think that future housing starts are slightly up, so that's going to affect how investors feel about investing in a larger market share. Anytime real estate is up, there begins to be a better good feeling going on in Wall Street, and all the fat cats think that the best thing to do is invest in some more real estate and more Gulfstream jets, and so that's what they're going to start thinking. Now I think if you go ahead and look at also the job situation, that's a real downer. You see, we've only added about 440,000 new jobs in America, which is deplorable. Out of a country that's more than 310, over approximately 300 million, we've only added 440,000 new jobs in America. You know, and everybody keeps touting how wonderful it is that we've added so many new job positions in America, and that unemployment is down to an incredibly low 3%. Well, I'll tell you what, if you added all the numbers up on the chart data, you'd see that actually our unemployment rate is more like 21%, and that's a realistic figure. That's not what you're being told. Well, I'm just going to tell you what the real truth is. It's 21% unemployment, not 3%. So that's affecting how everybody's thinking. And the real figures are approximately 440,000 new jobs. Is really deplorably low, considering we're a nation of more than 300 million people. So anyway, those numbers are going to start to take a bite out of the market too, and I think we're going to see some rough ride from next week. We're going to see a repeat of the same roller coaster, where we're going to go up on Monday and Tuesday, maybe into early part of Wednesday, and then people are going to get sick and tired of the roller coaster ride, and they're going to want to get out, and then we're going to go right back to Thursday. I think we'll go to Thursday, and then we'll just hit the bottom. We'll free fall, take a nosedive free fall right to the bottom. We're going to be scraping about 500 points down, my prediction. And then by Friday, we're going to have some common sense come into the market, and then people are going to say, well, you know what, this isn't right. And we're going to have a rebuild of about 115 approximately 115 plus, and so we're still might be even change on that by the time market bell closing on Friday of next week. This is the way I see it based on chart data and all your underpinnings and combined with economic data that's available. So this is the way I see it on Friday's market report, and hope everyone has a really blessed weekend. Keep on making money, and I'll tell you what, pay attention to your chart data. Pay attention to being a smart investor, and watch out for those things that can come at you out of nowhere. The market's famous for it's achieved worldwide fame for stabbing people in the back just when they least expect it. That's because they don't do their homework. You gotta do your homework in this job. If you don't, you're gonna get creamed. The market will take a big bite out of you, and you'll feel the pain in your both your retirement plan, your 401k, and you'll also feel it in your wallet. So anyway, this is John Norton, and hope you continue to watch my videos. Take care and have a blessed day now. Thanks for watching. Bye.